lovely trades. I wanted to do a video analysis update of the S&P 500. We're going to talk about the big picture view of SPY. We'll also talk about the small picture view of SPY. We'll talk about some setups in this market. We'll talk about silver and the silver miners. And we'll also talk about Fastly. I believe Fastly right now is really emblematic of a larger theme we're seeing in this market, where the growth side of this market, the kind of Cathie Woods corner of the market, is reaching peak capitulation. Okay, so let's talk about the S&P 500 first. This is my video from October 31st. I said very clearly a very bullish projection right before the election, when a lot of people said there's too much uncertainty, right? It's too reckless to make a prediction in the market. But this is what I had. I said this is a wave one. We had an ABC correction and we put in a wave 2 low. Then we had another wave 1 and another wave 2. And we could take the length of wave 1, place it at the wave 2 low, and the path to 460 had begun, right? And this wasn't a very popular opinion. This guy Billy, he said that my bootleg wave theory wasn't an infinitely repeating pattern. He said at some point I have to zoom out to the weekly and say this entire move will retrace. Well, Billy, the entire move didn't retrace. So if you shorted that because you thought something like that, you're probably in Latin America right now hiding from the debt collectors. So this is wave 1. ABC correction puts in a wave 2 low, another wave 1, and another wave 2. This is an extremely bullish projection right before the election, and it's played out very well. So we'll go over that. I continued to update on December 26th. I said I'll be extremely cautious if SPY is above 392, because that is the bull flag equal X target. But overall, I think we'll top at this pitchforks median. I said when SPY reached 392, that if we got a dip to the low 380s, so notice I wasn't saying I'm shorting to the low 380s. I said if we got a dip to the low 380s, that will complete wave 2 from the 129 low. Then we would rocket higher for waves 3, 4, and 5. So I said on February 10th, if we got a dip, we were going to recover everything anyway. So this is what I had. I said that this was a wave 1 from that January low, and we were looking for a wave 2 correction before we went higher for wave 3. So the wave 2 correction was about 10 points steeper than I thought, but we had cash ready to buy the dip. And then once we got that dip, I came out on March 8th. I said, this is wave 1, this is wave 2, this is wave 3, this is wave 4, and then we're within a larger degree wave 5. This is wave 1 of wave 5. Wave 2 of wave 5 was put in. We were going to go to 406, 410, and then we'd have a shallow wave 4 correction before a fifth wave took us to a local top around 422. So not perfect, but definitely came out on March 8th, and I said we're gonna take a big move higher. Once we reached 406, 410, I decided that the NASDAQ QQQ was a better way to navigate this market. I still believe that. I think QQQ, as long as it's holding above 324, the fifth wave of wave 5 will take it to 354. So let's talk about SPY right now. I really want to get into SPY. I talk about QQQ in every video. This is exactly what's played out from this video verbatim. So we're going to talk about the implications of this. This is a wave 1 and this is a wave 2. So the cycle, the bigger cycle begins on September 24th. Same as the QQQ cycle. We have a wave 1, a wave 2, a wave 3, an ABC correction puts in a wave 4 low, and then we begin wave 5 on the bigger time frame. So this is wave 1 of wave 5, and this is wave 2 of wave 5. Wave 3 goes past the 161.8% extension of wave 1. So that's a lot of evidence right now that this was a wave 3 high that was put in on April 29th. And then we have a wave 4 correction. So in LA wave theory, wave 4 is between the 23.6 to 38.2% retracement of wave 3. So that's exactly where this wave 4 ends. This low was 411.67. The 23.6% retracement was 412. So, right here, we really want to see 411 hold. If 411 does hold, there's a lot of evidence that this wave 4 low is in. And if we take the length of wave 1, we place it at the wave 4 low, then SPY's wave 5 target would be 436. Now, it's really important to understand that if you're, in this channel, we've been full bull since the election, right? So we're in what's called the driver's seat. This isn't the time to bet the farm, right? Because we're within wave 5 of wave 5. There are setups in this market, but don't let all these gains get erased, because what happens when we complete wave 5 of wave 5? Well, we're looking to correct this larger degree cycle, and we've talked about in previous videos how the seasonality of SPY, this very bearish June, right before the quarter ends, would really line up with this wave count we're seeing in QQQ and across the market, where a wave 5 ends, we correct the cycle before we explode higher. Now, we don't short ever. If it's an impulsive structure that's bullish, you're not going to short the corrective waves. So the Elliott waves, waves 1, 3, and 5 are the impulsive structures. Okay, the corrective waves are waves 2 and wave 4. You never trade a corrective wave. You prepare for it by having cash ready to buy the dip. So let's talk about what this dip would look like on the bigger term picture. Okay, so we'll look at the biggest term. This is the big bird view, not the biggest term view, but this is a larger degree count. So this is kind of what I'm expecting right now. Let's say hypothetically 436 was the exact wave 5 high. Now, what are the likelihoods that I perfectly nailed the top and and this is exactly what happens. I wouldn't, this is not the time to get out the microscope. But this is wave 1, this is wave 2, and then we have a wave 1, a wave 2, a wave 3, a wave 4, and then this is wave 5 that I'm looking to be complete. Right now, I want to see 4336 as the next wave 5 target. But we have to have 411 hold. Would it be the end of the world if 411 was broken before 436 was reached? No, we'd still be looking for a reaction between 406 and 411. So once the S&P 500, let's say it reaches 436, what would we then be looking for? This is a wave 1. This is a wave 2. So this is a 1, 2, 3, 4, 5, another impulsive structure. I believe this impulsive structure that we formed since September would be another wave 1. So we'd be looking for a wave 2 correction sometime in June before we exploded higher. We would never short this, right? I'm not going to come out and say, oh, time to short, right? Load up the puts, because this is against the larger degree trend, okay? So this is wave 1. This is wave 2. The equal X target takes SPY to around 460. Okay, that would be the conservative wave 3 target. We'd have a shallow wave 4 correction before a 5th wave higher. So wave 1, wave 2. I'm looking for another wave 1 to complete right now around 4,336. I've said in my prior videos, and I still believe this, the NASDAQ is the best way to gauge this wave 5 or wave 5. I'm looking for QQQ to reach 354 as long as 324 holds. But this is what I'm expecting. We complete wave 5 or wave 5. Everyone gets super bullish. The blow off top commences. We have a wave 2 correction sometime in June before we explode higher. Okay, so this is kind of the slightly larger count. Now we're going to look at the biggest picture, right? The biggest picture of SPY, the biggest picture of the S&P 500. So this is the count I have right now, and this kind of view can be replicated on a lot of the airlines. But this is wave 1, this is wave 2, and then we have an ABC correction from this wave 1 high. So the dot-com bubble is a wave 1. We have an ABC correction that culminates in the housing market collapse of 2008. So the big question right now is what is this big run, right? This huge, kind of 8 to 10 year run during that decade. What is that? Well, I believe it's a wave 1. It's another wave 1. And then this low that we had last year is another wave 2. So this is an extremely bullish projection on the larger time frames, right? There's not a wave 3 on this chart. I believe this is correct. And we look at the airlines, we look at Chevron, we look at Credit Suisse. This is being supported in a new super cycle that's kind of beginning in the the lesser known names, or more I should say the more value side of this market, like the airlines, the some of these regional banks, and a lot of these oil conglomerates put in generational wave 2 lows last year. So I believe this is another wave 1, this is another wave 2, and if you take the length of wave 1 and you place it at the wave 2 low, the next conservative target for the bigger picture for SPY is all the way up at around 4,900, right? So the length of wave 1 places the wave 2 low, gives you the conservative wave 3 target. We have a shallow wave 4 correction before a 5th wave higher, right? So it's important to realize, in my opinion, the bigger picture view of SPY is extremely bullish, okay? I'm just getting down into the nitty gritty right now to kind of see when will this cycle since the September 2020 low end. But the cycle on the bigger picture is still beginning, okay? So This is an example of the fractal nature of Elliott wave theory. So let's talk about some setups right now that are kind of, maybe good in this, last phase, maybe that are supporting the idea of a fifth wave higher. So this is Google. This is a wave 1 and a wave 2, and then Google goes past the 161.8% extension of wave 1, has an ABC correction to put in a wave 4 low at the 23.6% retracement of wave 3. So in Elliott wave theory, you have wave 3 that passes the 161.8% extension of wave 1, then the wave 4 retracement is the 23.6 to 38.2% zone. Okay, so I really like this Google setup right now for a few reasons. The first is that wave 3 is past the 161.8% extension of wave 1. But also, I really like to see with the wave 4, kind of this dual invalidation level where the 38.2% retracement of wave 3 also lines up with the wave 1 high. So right now, if wave 4, if this low of 2,256 holds, then we have a lot of evidence wave 4 is in. Okay, and then the invalidation level would be if Google broke below the 38.2% a retracement of wave 3, which would be 2,149. This also lines up pretty well with the wave 1 high of 2,145. So that's the invalidation level, 2145 to 2149. The stop loss is 2256, and we'd go the length of wave 1 in time and price, which is 7 weeks, and then 7 weeks from now, we would see Google reach 2,713. A lot of confirmation with Facebook and Microsoft and XLY that the market's ready to take a fifth wave higher. Okay, so this is Facebook, another good example of this. So remember, this is the conservative view of Facebook. The conservative view of Facebook is that this is a wave 1. We have an ABC correction to put in a wave 2 low. Wave 3 goes past the 161.8% extension of wave 1. And then wave 4 would be put in between the 23.6 and the 38.2% retracement of wave 3. So that did happen, and then Facebook at the very minimum, this is the very minimum, would go the length of wave 1, placed at the wave 4 low. That would take Facebook all the way to 335. But remember, we talked about in my last video how in Elliott wave theory, wave 5 must end with momentum divergence. Okay, so if this were really a wave 5 that was being complete, then the relative strength index should be making a lower low while price makes a higher high. What we're seeing right now in Facebook, if we're calling this a wave 3, then we're calling a wave 5 to be complete that makes a higher high in relative strength, and that is actually against the rules. So what's more likely for Facebook is that this isn't a wave 3, that's not a wave 4. And this isn't a wave 5. What's more likely for Facebook is that it's going to continue to be a huge outperformer. This move is from 3.4 to 4.08. It's about 4 weeks, but I think 6 weeks would be a little more conservative. 8 weeks would be very conservative, in my opinion. That Facebook isn't completing a wave 3, 4, or 5. It's completing a nest. So this is another wave 1, another wave 2, and as long as this low for wave 2 holds, then Facebook is going to go on another big rally to 358. It's going to prove that 335 was very conservative. So right now, Facebook, if it's above 295 in the next 6 weeks, in the next 8 weeks, I think we're going to see Facebook at 358. This would line up with what we're seeing in Google, and it's also going to line up with what we're seeing in the NASDAQ. This is another kind of gauge right now of this kind of more techie side of the market. This is MTUM. Largest holdings are Apple, Tesla, NVIDIA, and Facebook. And before we get into it, I just want to reiterate that Tesla, we're saying right now, or I'm saying right now, that Tesla is completing a wave 2 of a wave 2. I just want to make sure I really make this clear. We can't see Tesla below 631 and still make the argument that it's completing a nest. So right now, the invalidation level, the real invalidation level would be this wave 2 low of 590. As long as Tesla is bouncing impulsively out of the 61.8 to 78.6% retracement of wave 1, I do believe it's going to take another wave higher. We need to see Tesla break above 828. But I just want to reiterate, this kind of stop and invalidation level is 631. If Tesla's below 631, I can't make the argument that it's completing a wave 2 of wave 2. As long as it's above 631, with 590 being the true invalidation, I am expecting Tesla will take another leg higher. There's so many ETFs that Tesla is in that are supporting this idea. There's so many neighbors of Tesla that are supporting this idea, and MTUM is one of them. So MTUM is an ETF full of momentum stocks. So this is wave 1 as the ABC correction to put in a wave 2 low. Wave 3 passes the 161.8% extension of wave 1, very clearly a 5 waves impulse. This is an impulsive structure. Wave 1, ABC correction wave 2. Wave 3 passes the 161.8% extension of wave 1. We have a shallow wave 4 correction that perfectly retests the wave 1 high. If we take the length of wave 1, we place it at the wave 4 low. MTUM should reach 181, I believe, in the next 6 weeks. We're going to see this happen. Right now, I want the 61.8% retracement to act as the invalidation level of 161. I think a pretty tight stop would be 164. Okay, so this is MTUM, wave 1, ABC correction wave 2, wave 3 passes the 161.8% extension, shallow wave 4 correction that tests the wave 1 high, the length of wave 1 in time and price placed at the wave 4 low gives MTUM the next target of 181. Okay, so this is Nike. We talked about the bigger picture of Nike. So this is the bigger picture of Nike, that it's on a wave 1. I'm sorry this is messy because we're going to look at the shorter term view. Someone said, this made me happy, they did pretty good on Nike today. That they had a 2 times, they've doubled their money essentially. So remember, whenever I'm in an options trade and the options are up 100%, I always sell half of the position to remove the original risk of the trade. Let's talk about Nike right now. I really love this one. This is a great example of wave theory and low implied volatility making a very profitable relationship. So this is wave 1, wave 2, wave 3, we have an ABC correction to put in a wave 4 low. So I'm going to get a little nitty gritty on Nike right now. I'm sorry if this is messy, but this is what I have. So from this low of 125, remember 125 was the invalidation level. It wasn't broken on this test. So this was a wave 1 and then a wave 2. And then today, Nike breaks this wave 1 high. So the next level of interest for wave 3 is the 161.8% extension of wave 1. And then we look for Nike to have a shallow wave 4 correction before a 5th wave higher. So I think Nike right now is smooth sailing until it reaches 164. Definitely could extend past it, and then we'd have a shallow wave 4 correction before a 5th wave higher. But Nike looking really good. Lots of confirmation with a break above this wave 1 high that it is in an impulsive structure. And then the bigger picture view is that if you take the length of wave 1, place it at a larger degree wave 4 low, Nike is going to be heading all the way to 169. So, great job to Nike Bulls. I really like that setup, and it's playing out well. So now we're going to do something a little different in this video. We're going to talk about fundamentals, right? And I don't normally talk about fundamentals, but I've got a new microphone. I feel like Al Michaels. I'm feeling podcasty. And also because inflation is something that I was really early on in the first quarter of 2020. I was, ringing the hyperinflation alarm, and now some CEOs are starting to join the chorus. Let's read some CEO quotes recently. This is from Honeywell, but I'm not sure all of these are CEOs. I know Honeywell is the CEO. I know Coca-Cola is the CEO. Pepsi, this might just be an executive. Okay, but this is the Honeywell CEO. For us, inflation is taking hold. There is no doubt about it. We knew it. We see it. It's real. If you don't stay on top of it, the 2 areas where, and this is not a surprise, steel, semiconductors, copper, ethylene, those are the 4 elements that we saw substantial inflation in quarter 1. I don't think these things are going to abate. So it's illegal for a corporate executive to lie to shareholders. And the Honeywell CEO is saying inflation is very real. There's no doubt about it. He doesn't think these things are going to abate. He said the short cycle is definitely hard. We all read the same articles about semiconductors and what's going on there. And I think we're going to have to stay ahead of it. But we do expect that inflationary environments this year, and we're going to be to stay ahead of it. So I'm just reading a direct quote from the Honeywell CEO. Inflation's taking a hold. I don't think things are going to abate. We see it. It's real. All right. Pretty blatant from a CEO of Honeywell. PepsiCo quote, in terms of the year 21, there is certainly higher input inflation, but it's been factored into the 21 guidance, notably in terms of agricultural and packaging. In addition to that, we have also factored in the higher freight and transportation costs that we're experiencing out there right now. So that's pretty blatant. We're having inflation in agricultural and packaging. We're also having inflation in freight and transportation costs. Coca-Cola CEO says the company will raise prices to offset higher commodity costs. So Coca-Cola CEO already saying we're going to raise prices. We're going to follow the steps of Kimberly-Clark and J.M. Smucker. We're going to raise prices to offset commodity costs. So what's going on here, right? I thought last quarter we were making fun of the silver bulls. I thought last quarter we were making fun of the silver mining bulls. Let's talk a little bit about fundamentals. So everyone wants to know, why is inflation happening, right? And there's a very clear answer, right? This is kind of what you'll hear, is that interest rates are zero and unemployment is high. So that's why we have inflation, right? It's basically free to borrow and unemployment is high. We have these stimulus checks. That's quote unquote why inflation's happening, right? And there's a lot of truth to that. We're going to talk about we're answering the question in this video: is inflation going anywhere? Right? And spoiler alert: the answer is inflation has not even started. Right? So we have all these CEOs talking about inflation. Inflation hasn't started. Okay, the charts are very clear about that. We're going to talk about some ways that I believe, in my unprofessional opinion, that we can protect ourselves from inflation through shareholdings. Okay, so is inflation going anywhere? Right? That's the question we're going to answer. But first, let's answer that why question, because there is, a why factor. So this is a document from the Federal Reserve called Modern Money Mechanics. So this is straight from the Federal Reserve. Federal Reserve Bank of Chicago is the author of this booklet. So I'll leave a link to this, but there's a section of this document called "What Limits the Amount of Money Banks Can Create." Pretty blatant, right? What exactly limits the amount of money banks can create? Well, let's find out. So, such expansion cannot continue beyond the point where the amount of reserves that all banks have is just sufficient to satisfy legal requirements under our fractional reserve system. So we have a fractional reserve system, okay? For example, if reserves of 20% were required, deposits could expand only until they were 5 times as large as reserves. So right then, it's saying if the required reserves ratio is 20%, deposits can expand 5 times as large as reserves. Okay? Pretty simple. For example, if the required reserves ratio was 20%, reserves of 10 million could support deposits of 50 million. Okay? Pretty clear. Then right here, the lower the percentage requirement, the greater the deposit expansion can be supported by each additional reserve dollar. So clear as day. Clear as day, the lower this required reserves ratio, the greater the deposit expansion can be supported, right? That's straight from the Federal Reserve Bank of Chicago. That is not my opinion. Okay, this is the Federal Reserve's opinion, that the lower the required reserves ratio, the greater the deposit expansion can be supported by each additional reserve dollar. And then clear as day, thus, the legal reserve ratio, together with the dollar amount of bank reserves, are the factors that set the upper limit to money creation. Okay, so the factors in the upper limit to money creation. So if I remember my elementary school math correctly, a factor are the two things that are multiplied together to make a product in multiplication. And if one of those things is 0, then no matter what the other factor is, the product is going to be 0. So it's saying right here, one of the factors in this equation for how much deposit expansion can occur is called the legal reserves ratio. So let's look. What is the legal reserves ratio, right? It says right here that if it were 20%, deposit expansions could increase by 5 times as large as reserves. Okay, so that's interesting. What is the required reserves ratio? That's interesting. We don't want to do Investopedia. Let's get this straight from the horse's mouth. FederalReserve.gov, right? These are the people who wrote this booklet. Let's see. Because remember, if the required reserves ratio is 20%, then only 5 times the amount can be supported in the expansion. It says very clearly, the lower this number is, the more money can be created. As announced on March 15th, 2020, the board reduced reserve requirement ratios to 0%. Whoa! Whoa, whoa! Okay, let's keep reading. Right, maybe I'm just getting this wrong. The board reduced reserve requirement ratios to 0%, effective March 26, 2020. This action eliminated reserve requirements for all depository institutions. Whoa, that's not good, right? That can't be good, because it says right here, the lower the percentage requirement, the greater the deposit expansion that can be supported. Well, the reserve requirement right now is 0. Oh no, that's not good, because it says the factors that set the upper limit to money creation is this reserve ratio. That's not good, because one of the factors in what's setting the upper limit to money creation is 0. That means the product is 0. That means there is no limit on money creation right now until we get this required reserve ratio below 0. That's not good. So let's look at the price of silver, because we're already seeing these CEOs talk about inflation, but inflation hasn't started. Right? They're talking about inflation. Inflation has not started. Let's make that perfectly clear. You think inflation's bad now? You haven't seen anything yet. Anything. Silver, wave 1. A, B, C correction puts in a wave too low. The reason I have this marked out is that either wave 1 or wave A, because in Elliott wave theory, wave A and wave C is at least the length of wave A. Wave 3 is at least the length of wave 1. So no matter how you count this is either a wave 1 or a wave A. This is either a wave 2 or a wave B. Okay, so wave C or wave 3 will be at least the length of this move. That's going to take SLV to 50. Oh, it's at 25. Right, so all these CEOs are talking about, inflation's getting real bad. Silver's about to double. And that's if you're bearish. Right, that's if you're saying this is a wave A, this is a wave B, this is a wave C. That's not a wave A, that's not a wave B, that's not a wave C. This is clear as day. A wave 1, a wave 2, and a wave 3. Silver is going to the median of this pitchfork. You can see with your own eyes right now, if silver took a beeline to the median of this pitchfork, it would hit 50. We have all these CEOs talking about inflation. Mr. Honeywell CEO, inflation hasn't started. Inflation hasn't started. If silver SLV stays above 20, this is a nest. Wave 1, wave 2, wave 1, wave 2. Silver is about to explode. Silver is about to Bitcoin. Inflation, we're in the first inning of inflation. Wave 1, wave 2, silver's a nest. Wave 1, ABC, wave 2. Wave 1, wave 2. If silver is above 20, the minimum target is 50. But let me tell you right now, once silver is above 50, an investor hypothetically will be very scared if their entire portfolio is denominated in US dollars. I'll just say that. You don't want to get silver above 50 and then ask, what am I going to do about inflation? Alright? Is it just silver, right? Am I being an alarmist? Nope. It's all over this market. So this is SILJ, okay? Someone put a gun to my head, said, puppy trades, what's the best way for me to protect myself from inflation? I'd say I'm not a certified financial advisor, but it would be shares of SILJ as long as this low of 12 holds. So silver, right now, I think SLV should be the invalidation for everything. We want to see SLV above 20. If silver, SLV is above 20, this is a wave 1, a wave 2, a wave 1, and a wave 2. Silver's going to explode, right? The time target, this is a multi-year thing. Okay, this is not I'm going to get a 6-month swing. Okay, this is a multi-year. I'm playing this with shares. I'm playing the long game. I want to hold SILJ, SLV, SIL for years. Okay? But this is SILJ, the junior silver miners. Wave 1, wave 2, wave 1, ABC, wave 2, wave 1, wave. This is a craziness, right? This is insane. This is all saying that this is all basing. Wave 1, ABC, wave 2, wave 1, wave 2. If SILJ is above 12, the next minimum target is 25. That's the minimum target. What's scary is that would take SILJ not only above this high, but to a new all-time high. It would confirm that this has been a decade of basing. So I think the junior silver miners are the best way to outperform inflation. Inflation's either going to make you rich or it's going to make you homeless. And you're going to make that decision right now. Okay, this is SILJ. This is SIL. This is the large cap silver miners. So, I like this a lot. This is a pretty count. Wave 1, ABC, Wave 2, Wave 1, Wave 2, Wave 1, Wave 2. So remember, all these invalidations are going to be hit if SLV goes below 20. And I'm looking at this as a shareholding perspective. Okay, this is Wave 1, ABC, Wave 2, Wave 1, Wave 2. SIL is nesting. The next conservative target is 78. We have a shallow wave 4 correction before a fifth wave higher. That conservatively, no matter where this wave 4 ends, will take SIL, the large cap silver miners, to a new all-time high. It will confirm that this was a decade of basing for the silver miner ETF. GOLD gold, Wave 1, Wave 2, Wave 1, Wave 2, Wave 1, Wave 2. Maybe the 20-year chart looks better. Okay, so this is the Wave 1, Wave 2, Wave 1, Wave 2, Wave 1, Wave 2. GOLD, this is a large cap gold miner, is about to blow up. Wave 1, ABC, Wave 2, Wave 1, Wave 2, Wave 1, Wave 2. The next conservative target is the 161.8% extension of Wave 1. That would take GOLD, Barrick Gold Corp, to 42. We have a shallow wave 4 correction before a fifth wave higher. Okay? It's important to realize last quarter we were making fun of the gold and the silver bulls. And it looks like they're in a generational buying opportunity, or they were in a generational buying opportunity at that point. So GOLD, if GOLD is above 18, next stop is 42, then we would be having a shallow wave 4 correction before a fifth wave took us above this high of 2011, which would also confirm 10 years of basing. Okay, so GOLD, SILJ, SLV, and SIL are all saying the exact same thing. Well, we were making fun of the silver and gold and precious metal mining bulls. That tune is changing very quickly. Okay, those people last quarter were making a generational decision that I believe was very good. And if you look, we talk about American Airlines real quick. The boomer stock value investors, they were being made fun of in the last quarter of 2020, right? In the fourth quarter of 2020, we were making fun of these boomer stock investors. But it looks like American Airlines was putting in a wave 1 and then a wave 2 correction. Now American Airlines is not only set to have a really good swing trade opportunity, but also a really good long-term opportunity where American Airlines and JetBlue and Boeing are going to break above this high in 2018, and this low that was put in last year is going to be a generational low. So remember, for American Airlines, as long as we hold above 18, I think that this is a really clear swing trade opportunity where American Airlines will go the length of wave 1. The 161.8% extension of wave 1 is the wave 3 target. We'd have a shallow wave 4 correction before a fifth wave higher. I think in the next 2 months, we're going to see American Airlines complete this leg up to 31. And in the bigger term picture, when we talked about the S&P 500 being, a huge opportunity or a huge bullish nest that was complete in where this wave 2 low was put in March. American Airlines and Boeing are really kind of supporting that idea. But one thing I really want to point out in this video, last quarter, we were making fun of the precious metal bulls when they were making a generational, in my opinion, good decision. In the quarter before that, we were making fun of the value investors and their boomer stocks when they were making a generational good decision. So who's being made fun of now? It's the growth investors, right? These growth stock investors are being mocked. And this is where I'm going to wrap up this video with Fastly. So, we're making fun of growth investors right now. I don't think that's going to last. I don't think we'll be doing that this summer. Okay, this is Fastly. Wave 1, Wave 2, Wave 3, Wave 4, Wave 5, large degree Wave 1. A, B, C correction, large degree Wave 2. Wave C has reached the length of Wave A. 5 waves impulse, A, B, C correction is ending in the Wave 2 box between the 61.8 and 58.6% retracement. So Fastly right now, I think is very emblematic of a lot of things we're seeing across the growth side. We're in the same way we made fun of the value investors in the last quarter of 2020 before they exploded. We made fun of the precious metal bulls in the last quarter, in the most recent quarter. Now we're making fun of the growth investors. I think Fastly right now is emblematic of larger capitulation in this sector, and I believe what we're going to see is that when SPY completes this wave 5 and pulls back, it is going to be a massive rotation into new leaders that are in kind of this ARK ETF. And I think Fastly right now, this 27% down day, 70% off the high, we're within the 78.6 to 61.8% retracement box. I need more evidence that wave 2 is in before I give a time target. But right now, if Fastly's above 37, I think it's going to bounce impulsively from this box. Wave 1, ABC, wave 2, the length of wave 1, place of the wave 2 low would give a conservative time target. Right now, I really don't want to see 37 broken. But realistically, Fastly is a growth stock, right? If a trader hypothetically enters a growth stock with a stop loss below 4 or 5%, they're not going to make it, right? They're not going to be holding Fastly a few years from now, okay? This is the wave 1, wave 2, wave 3, wave 4, wave 5, large degree wave 1. An A, B, C correction is putting in a wave 2 low. Right now, I think Fastly is going to have a huge impulsive reaction from this box. Now, implied volatility is pretty high. I think the only way to look at Fastly, in my unprofessional opinion, is as a shareholding. But I think probably the best way to look at Fastly is to say, we're reaching capitulation in the Cathie Wood side of the market. If we look at the S&P 500, we're ending wave 5 of wave 5, and this sell-off that I'm expecting in June is really going to be massive rotation back into the Cathie Wood sector. And it's going to be just like the airlines. It's going to be just like the precious metals investors, where when we were making fun of the growth investors, in reality, they were the ones making the life-changing decision. And I think Fastly right now is very emblematic of that. Wave 1, A, B, C correction. Wave 2, wave C has reached the length of wave A. We're within the 78.6 to 61.8% retracement box. I think we're going to see Fastly put in a wave 2 low and go on an impulsive run higher. We need to make sure this wave 2 low is in before we give time targets. Options implied volatility is pretty high regardless. But the next conservative target for price for wave 3 would be 167. We'd have a shallow wave 4 correction that hypothetically would retest this wave 1 high before a 5th wave higher. And as crazy as it sounds, the 5th wave would take Fastly to 260. I think right now, the growth investors are the laughingstock of this market, just like the precious metal investors were the laughingstock of last quarter, and the airlines were the laughingstock of the quarter before that. I think next quarter, that's going to change. Okay, so Fastly is very emblematic of what I believe. Once SPY completes this wave 5 of wave 5, we're going to have a massive rotation into the Cathie Wood stocks, and they're going to rock this summer. It's all over the market. It's all over the electric vehicles. It's the same count, a 1, 2, 3, 4, 5 impulse. Now we're getting rid of the people before we have this huge wave 3, wave 4, and wave 5 higher.